following portion of Fox 43 AM Live is sponsored by Endeavor Private Wealth.
Chris McGee, managing partner at Endeavor Private Wealth, is joining us for our latest segment on investing. Chris, good morning.
Good morning.
Great to have you here. So, Chris, now the term AI is commonly associated with artificial intelligence. We've talked a lot about it on the show, but it also relates to alternative investments. And that's what I'd like to ask you about today. So, what are alternative investments?
Alternative investments are investment asset classes that are different from the traditional asset classes of stocks, fixed income, and cash equivalents. They are investments that may employ hedging, arbitrage techniques using long and short positions, leverage, derivatives, private investments, and investments in a variety of global assets and markets.
Okay, so what's the appeal then of alternative investments?
History has shown that diversification, putting money in a variety of different types of investments and asset classes generally has been an effective strategy to help manage a portfolio's risk and return profile. Adding alternative investments to the traditional portfolio of stocks, bonds, and cash may potentially enhance performance and help to mitigate risk associated with any one investment or asset class. However, it's important to remember even diversified portfolios can experience market losses.
How can investors access these alternative strategies?
Until the introduction of alternative investment strategy mutual funds, the availability of alternative investment strategies was really limited to private placement investments that have high net worth and asset thresholds. With alternative investment mutual funds, or liquid alternatives as they're also known, more investors now have the access to certain alternative investment strategies.
And you referred to alternative mutual funds as liquid alternatives. What do you mean by liquid?
Mutual funds are regulated by the Securities and Exchange Commission under the Investment Company Act of 1940, which imposes a variety of limitations and restrictions on their investments and the use of leverage, shorting, and derivatives. These regulations also provide for daily liquidity. Private placement investments, such as hedge mutual funds or hedge managed futures, private equity, private debt, and private real estate, have a broad investment flexibility, but generally have much more restrictive and less frequent liquidity options, meaning investors may not be able to sell their investment anytime they want.
And it sounds like that could be a bit of a problem.
It certainly could be. On one hand, if your investment is locked up for a number of months, perhaps even years, you may be in a better position to ride out the market downturns instead of panicking and getting out. On the other hand, if you have to liquidate, your options for doing so may be limited and discounted in price.
Chris, any additional thoughts you'd like to share with our viewers about alternative investments?
I believe investors should consult with a trusted financial professional to determine if alternative investments should be included in their portfolio. Your advisor can help you to understand the differences between alternative investment mutual funds and private placement varieties, and most importantly, explain the potential benefits and risks associated with this unique asset class to help you make sound investment decisions.
Wonderful. Chris, as always, we always appreciate your time. And to learn more, everybody, please, about Endeavor Private Wealth, visit EndeavorPW.com.